Let's go over here and take a look at the 10-year yield. So this is your monthly chart. The reason I'm starting here is very simply we have to be looking at the overall charts here to understand exactly what is going on. And so what we could clearly see is that the bigger time frame, and the bigger time frame really gives us a good view of the bigger picture. Remember that, folks. You don't look at the 10-minute or the 15-minute or the 60-minute chart for a big view. You go to the weekly, the monthly, maybe the daily, depending on your time horizon. So we see very clearly here, we have all of this as a level. Now again, my thought process prior to this, and this is the amazing thing about it, is if you look at how the setups go as a swing trader, when we were trading up here on yields, when the dollar was into that level that we're going to look at just in a second, I was short the market. All right, I was heavily short the market. I have pared back those shorts and I've started to accumulate longs. So this is what a swing trader does. We swing back and forth depending on what the market is telling us based on the charts. Now remember, the charts are probabilities, and that is what I'm here to tell you about and give you insight into. So we clearly see that we've pierced this level. So probabilities, yes, they continue to dictate that yields should potentially fall. We know that when yields pull back in the near term, generally the markets catch a bid. Okay, so if we look at this and now we break it down into a shorter time frame, let's flip over to the daily chart. All right, yesterday we see this red candle down. That was following what happened with Hamas going into Israel and obviously the retaliation and so forth. We saw a big drop in yields. Notice where we went to. We went right to the white trend line, which on the monthly chart is still in play, but on the daily chart, this is a little bit of support now. I mean, this is how amazing it is when you break it down into smaller time frames. The big picture gives you that the idea that yields will continue to come down, and that tells you over the next 3 weeks, 4 weeks, something like that. The shorter term, the daily chart, is showing us that we had come back into this white trend line, and we might be due for a very short-term bounce. So that is what we're seeing on yields. Yields on the 10-year are trading back to about 4.7%. All right, so overall, you have a little bit of upside here. The key is this: to understand how to read this chart, all you need to know is you have a daily topping tail right there. As long as the yields don't close on the daily chart above that 4.9%, then again, the bigger time frame is the dominant time frame, and you look for further downside overall over the next 3-4 weeks in the yields. That also, again, makes you think that, okay, we could get weaker economic data. Yesterday, I discussed how the jobs number on Friday at 336,000 was not really real. Now, granted, was it jobs created? Sure. But again, it was mostly part-time. In fact, a majority of it was part-time. Full-time workers actually lost jobs last month. Now again, keep in mind, part-time could also be that some people are working full-time jobs and they're actually having to take on a part-time job in addition because of inflation. And that is not good economically, as we know. Just think about the cost of a mortgage right now, the cost of cars. The cost to get a car now is at its all-time highs. You're talking like crazy money, $700 in terms of a payment per month. So it makes it very out of reach, and a lot of people are going to be forced to get secondary jobs, which are part-time jobs.